Amazon is a $2 to $2.5 trillion company. Could it easily be a $4 trillion company when you really understand the segments of their business?
We're going to talk today about Amazon's 3 different segments, and they're not the ones they report to investors, and what those segments could do to in terms of boost Amazon's return on assets, and why you might want to keep an eye on the firm. Let's talk earnings and favorite pastime.
So let me just say, earnings
Wall Street. It's 2.5x
because their compensation goes up.
Wall Street's wrong again. So, in our last episode, we talked about how AI is coming for your job. And one of the companies that we actually talked about was Amazon, and how Amazon CEO Jassy came out and basically said to employees, look, we don't know what's going to happen in terms of what our headcount's going to look like in a few years, but we are aggressively adopting AI, and it means that we're going to actually see some disruption in how we think about who is going to have jobs, where we're going to have jobs, and how those jobs are going to look. And so we thought, let's actually take a step back and let's look at Amazon and how AI could potentially accelerate and revolutionize Amazon's profitability and Amazon's business. So when you look at that, what we want to do is let's step back, everybody, and first look at how do you think about Amazon? And by the way that Amazon tries to tell you to think about Amazon is not how any smart investor who, true institutional investor who's worth their salt, looks at Amazon. Amazon reports their segments this way. They say, hey, look, we've got 3 businesses. We've got Amazon North America, Amazon International, and then we've got AWS, right? AWS, obviously, Amazon Web Services, the thing that has powered so many companies in terms of their ability to be able to use data infrastructure, and internet infrastructure without having to own it themselves. Well, no investor looks at Amazon this way. This is how every investor looks at Amazon when they dig into Amazon. They say there's really 3 parts of Amazon. There's Amazon Web Services, and then there's Amazon Retail and Amazon Marketplace. And we'll explain to you what those 2 labels, Amazon Retail and Amazon Marketplace, mean in a moment. But just to look, when we dig into it, just to understand, we're going to talk about those in the context of the uniform profitability. So we did work on Amazon a few years ago. One of our big institutional clients came to us and said, I know that the way that I look at Amazon in terms of what I can see on the as reported metrics does not show me how profitable this business really could be and is. But what I really need to understand is what are the adding and subtracting, what are the values that each individual segment of Amazon actually produces so that I can figure out when I analyze Amazon if they're pulling the right levers. Joel, I mean, right, for what it's worth, this is work that you used to do for corporations themselves, right, in terms of this kind of level of segment analysis.
Yeah, and what it says, exactly, because they want to say, what do our segments look like? Well, a lot of times a CFO would say, and still do, I want to look at my business segments as if each of those were separate companies in a portfolio of stocks. How do they look? And yes, what you're looking at for Amazon Retail, Amazon's, since the birth of selling books online, Amazon Retail loses money. And what you see is they increase their investment in it. So why would they keep increasing their investment in a business that truly does lose money every year? This goes back to 2013, right, to 2018. Well, the reason they do it is because it's a loss leader for the other parts of the business. And if they didn't have that business, they wouldn't have Marketplace, and they never would have created AWS.
So to step back, everybody, in terms of what this is, and we just wanted to show you Marketplace briefly before coming back to Amazon Retail. So what's the difference between Amazon Retail and Amazon Marketplace? Well, you can think of Amazon Retail as basically being Walmart online, just to be overly simplistic. They buy a bunch of inventory that they buy because they buy at volume at cheap prices. They also have their own products too that they launch, just like Walmart has. And then they go and they sell those things. But what the important thing is they're taking the inventory, they're handling the logistics and all that other stuff, and all that stuff costs money. But what they're doing is they're saying, hey, look, that's okay though. We're going to actually not make money on this part of our business because there's a really cool thing that we can do once we've built all that infrastructure. And that's what Amazon Marketplace is. Amazon Marketplace is Amazon basically saying, we're also eBay. But we're eBay in an organized and far more aggressive and thoughtful way and partnered way than eBay is. What Marketplace is Amazon never takes ownership of the inventory. This is a staggering business that Amazon has, which is, right, 40% of its business. It's basically equal in terms of size, footprint, as Amazon Retail, all they do is they go, well, we've already got all these warehouses. We've already got the main online portal that every single person in the world uses to buy stuff. So here's the thing is you can sell your stuff on our portal, or you can sell other people's stuff on our portal. And if you offer a better price than we do in our core business, that's fine. We'll feature your offering, not ours. And so because of that, everybody comes to Amazon. But because Amazon doesn't have to take ownership of the inventory, this is a phenomenal business. All that they're doing is they're taking a VIG. Every single time somebody buys something, they take a VIG in terms of you pay them for that, and you store your stuff in their warehouse. So you actually put your stuff in their warehouse. They never buy it, but then they actually get paid for the logistics too. Amazing business. So Amazon goes, yeah, of course, I will lose 25% on one business to make 42% on the other business, because the other business, it has a massive, massive growth opportunity. And both of those businesses.
And had they not had those two businesses, they never would have built the cloud computing necessary to drive such gigantic online businesses, which then they woke up one day and said, I think other people could use these cloud services. I don't think Walmart.com is going to be using them anytime soon, but other firms could be using Amazon's cloud business like we do, because they do have fantastic cloud services. And that has grown to become a quarter of the business or more today, with also a gigantic 30% return on assets. So no problem having a negative retail business, which a lot of people don't realize that they still to this day have a negative return in their retail business, but they're crushing it in the two other businesses that they wouldn't have had they not had the loss leader in the first place.
And if you think about it, right, when we think about AI, because AI is AI plus robotics, right? Amazon already, automates a lot of the stuff that they do in terms of in a warehouse, but now imagine, right, Amazon's got 150,000, I forget the total number of employees that they have. They have a staggering number of employees, and a ton of them work in the warehouse. Well, if you could use AI and robotics to automate that more, to automate the logistics more, to automate a lot of those things more, all of a sudden the profitability of Amazon retail can get closer and closer to neutral. And in AWS, first off, AWS has two benefits from AI. One, anybody who needs to do AI compute, some of them are going to come to AWS to do it because AWS is a neutral territory. It's Switzerland for AI. Unlike Meta or unlike Google or unlike Microsoft, that all kind of have vested interest in Meta's open source, Google DeepMind, and with and everything else. And also, when you think about it from Microsoft, obviously with OpenAI, AWS kind of goes, whatever you want to use, you can use. That's fine. Go for it. So AWS is going to grow a lot because people need more compute space and more everything else. And on top of that, they're going to get value out of potentially being able to automate things with AI too. So let's look at what the market's pricing in for Amazon right now. Right, this is, as always, the orange bars here are the orange distorted as reported return on assets for Amazon. It says Amazon historically is a 5% return on asset weak retail business. Right, I mean, corporate average 12% return on asset in the United States. Amazon is half that according to the as reported metrics. And
those numbers
volatile.
Right? How is the company? If the company really has had years of a 2% return on assets, how on earth is it a $2 trillion company? Investors,
right? Exactly.
Know this company is getting returns well above their cost of capital, massive amounts of economic profit, and that's what those blue bars reflect, being so much higher than the GAAP accounting numbers.
Right, I mean, uniform ROA is really around 11%, double what as reported metrics have. And Wall Street is forecasting they're going to stay around these levels for the next 2 years. Amazon's going to invest a bunch, but also they're going to basically, and profitability is going to stay flat from that. But here's what's really interesting, right? When you look at what the market's pricing in return on assets for Amazon to get to 13%. And initially, that kind of looks expensive. Right? I mean, hey, this company's been flat 11% return on assets for the last couple of years. But when you just think about the conversation that we just had, right? AWS is 25% of Amazon and a 35% return on asset business. Well, if that 25% of Amazon becomes 50% of Amazon, right? That's not going to, which is possible because it's just going to massively grow, right? You're not looking at a return on assets of 13%. You're saying that business alone creates a 18% return on asset for Amazon, and then you've got anything else for Amazon Retail and Amazon Marketplace. But then, Joel, yet on top of that, Amazon Retail and Amazon Marketplace could also benefit from this AI kind of and robotics and automation process. you could have significantly higher return on assets here. And if you have that, everybody, that's the interesting thing here is, sure, Amazon at $2.2 trillion might look like it's a very expensive business and high expectations, but there's a lot more upside here, Joel. I mean, we think it could even double, right?
The efficiencies in AI and robotics for the supply chain and the distribution channel, arguably the most expensive parts of any business, but certainly for Amazon. And then you say, so could you, because of this, can you get Amazon retail to just lose half as much as they're losing, right? And can you get Amazon Marketplace to continue to grow? And then AWS we know is growing, right, by such an extent that 13% as a 13% ROA, which by the way is just US corporate average in terms of profitability level. Why couldn't they get to 18 to 20? And if they got to 18 to 20, this stock is, I don't know, 50% or less, 50% or more undervalued. That this stock has another 50% to even a double in reasonable expectations, given everything happening with Amazon that's so positive.
Right, and that's why everybody, we always joke the idea Amazon has a TAM, total addressable market, of global GDP, and that's how you can say that a company that's worth $2.2 trillion could be worth a lot more. That's this episode of Altimetry Authority. If you like this, hit the like and subscribe button and drop us a comment and come back for next time. Thanks, everybody.